TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow up 47, Nasdaq's up 22, S&Ps are up 5. Gold contract down $9.60, trading at $11.69. We have silver down 19 cents, $15.50. Platinum's off 3 at $1,078. Light sweet crude up 58 cents at $58.90 a barrel. Bonds are flat. You have the 10-year down 2 ticks, 126.04. 30-year also down 2 at 150.27. Both the bond markets, folks, all the bond markets, treasuries that is, went topside yesterday, had wide price spread, had accelerated volume. Bonds have finished their downtrend. They want higher price once again. King dollar. King dollar's up 350 ticks, trading at the 95.30 level. The euro is down 36 at 112, and the yen is up 20, down 20 rather, at 122.37. We get over and we take a look at the S&Ps. What you're going to see out here is this. SPY yesterday, folks, barrel down with volume. Monster volume, too, by the way. We did 202 million shares on the SPY. SPY hit a low yesterday of 205.33. You got a dead cat bounce out here today. I suspect this bounce is not even going to hold, and we're going to go from positive to negative. Classic bounce in a market that came down fast, furious, all of the above. I don't expect another 200 or 300 point down day. What I do expect is you're going to have a flat market. It's going to get into the red. What the SPY is trying to do and the S&P is trying to do right now is go after the swing points that were generated out here on March 26th as well as March 11th. Those swing points inside the S&P are 204.40. If we take a look at the NDX 100, it's the same type of setup in the NDX 100. That came down with monster volume. We did 50 million shares on the way down. The Qs, by the way, folks, they're unloading those. We've already done 6.9 million shares in the Qs, which is phenomenal for 35 minutes into the market. The Qs are building cause to get into the 104.24 level. Gold contract. What you have with gold is this. Gold looks to me like this is just the bottom right here. We're dealing with no buyers. The contract itself has tested the low of 1168 twice this morning with 72,000 contracts. The 72,000 is going into 150,000. I expect before the day is out, what you're going to see is that gold is going to be at a higher price. Bonds. The ever-ready bond market is back, folks. The amount of money that went into bonds yesterday, pretty phenomenal. We got up on the 10-year. That 10-year ran into the price point of 126.29, big numbers. We did 1.6, almost 1.7 million contracts. This bond market is going to build cause to at least try to get up into the 127.23 area. King dollar. What do we have with King dollar? King dollar had a deviant move yesterday. You had the Greeks basically in a mess of trouble. Bottom line, euro goes up, dollar goes down. At the end of the day, intraday, what we had is that you actually had a higher price intraday with volume, which is 96.69. So what that sets up is that's going to try to build cause to get up into that level once again. What you can expect out here today is that you can expect high volatility, or one more, the transports. What the transports have done is this. The transports hit the high of the October 14th level. That level, folks, is crucial. That number is 8169. Even with the bounce out here today, it can't get out of that number. That's saying the transports are coming down to the 7,700 level. The correlation inside that for the S&P and the Dow is dramatic. We're talking about another 1,900 points down in the Dow, and you're talking almost 180 points down in the S&Ps. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking to you right back here tomorrow morning, 10 a.m. If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.